Welcome to the most in-depth housing breakdown you'll see this year. In 2025, America's housing market is unlike anything before. Rents dipping, prices surging, mortgage relief glimmers, yet homeownership slips further from reach. We're diving into what's actually happening in your city, from Boston to Boise, breaking down data, news, and expert insight. Whether you're renting, buying, or somewhere in between, this is the housing guide you didn't know you needed. The U.S. housing market in 2025 is a complex web of conflicting trends. A landmark report from Harvard's Joint Center for Housing Studies warns that home sales are now at a 30-year low. Driven by soaring home prices and skyrocketing borrowing costs, the median home price climbed from $400,000 in 2024 to roughly around $440,000 by mid-2025, pushing the price-to-income ratio to a staggering 5. Far beyond the traditional 3 standard for affordability. This has hit middle-class families particularly hard. The income needed to afford a medium-priced home has leapt to $126,000, a 60% jump since 2021. While median household income just sits around $80,000, the median first-time buyer age has risen from 28 in 1999 to 38 as of 2025, and their share of home purchases has dropped to a historic low of 24% according to the New York Times. Yet, there is silver lining. Mortgage rates have dropped to their lowest levels of 2025, with the 30-year fix at 6.58%, offering a bit of relief to those priced out just months ago. According to the Wall Street Journal, refinancing is surging up 23% week over week, with adjustable rate mortgage, ARM for short, applications reaching heights not seen since 2022, but home sales remain sluggish. On the rental front, growth is still strong. In 2024, the U.S. added 600,000 new multifamily rental units, the highest annual tally in nearly 40 years. Yet renter growth outpaced that. 2024 saw 850,000 new renter households. Vacancy rates are plunging. Cost-burdened renters now account for 50% of households, many paying over 50% of income on rent. Meanwhile, low-cost affordable units are disappearing. Units under $1,000 a month fell by over 7 million in the past decade. Let's look at some city and regional breakdowns across the United States. First, we look at Boston, Massachusetts. Boston, with its historic charm and booming universities, should be fully priced. Yet, affordability here is reaching a breaking point. Median home prices hover near $800,000, meaning you need an income exceeding $200,000 to meet traditional mortgage rules. Renters, you're paying some of the highest in the nation, yet stabilization policies may offer a thin silver lining. Even wealthy earners in the Northeast are reconsidering home ownership. In Connecticut's affluent counties, a growing number of millionaires prefer renting, choosing flexibility and avoiding the burdens of maintenance and skyrocketing property taxes. This echoes broader sentiment that owning isn't always worth the trade-off, especially with interest rates and property levies this high. Mortgage relief is welcome, but tempered by tight inventory and persistent price pressure. Refinancing is rising, but buyers in this area are stuck between sky-high prices and meager supply. Panelists in local housing town halls report fewer first-time buyers willing to even enter the market. You're often bidding against institutional buyers or relocating homeowners, further raising comps. Takeaway: if you're renting here in Boston, Massachusetts, lock in your lease or explore stabilization zones. If you're buying, know that you're not negotiating an asset, but an insecurity. Use digital tools like Reventure app to hone in on zip-level trends and avoid overpriced neighborhoods. Now let's look at the New Jersey suburbs. In New Jersey, inner ring suburbs, Union City, Elizabeth, Piziac, the landscape has flipped. Renters now outnumber homeowners in 39 suburbs, the highest ranked nationwide according to the New York Times. And in places like Union City, renters exceed 80% of the population. So why is this shift? Median new home prices have surged over $400,000, while mortgage rates near 6.5%, pushing cost-sensitive renters toward apartments in transit-rich areas. Developers have responded, building mid-rise rental buildings near commuter hubs. Renters benefit from plentiful options, but still face cost burden. Suburban rent control remains light, so rising demand can translate into rent hikes, even if slower than in hot metros. Here's the takeaway. For renters, these transit-adjacent suburbs may offer value relative to Boise or Boston, but watch for gentrification pricing. For buyers, Buying here could mean competing with renters, not homeowners. So be armed with comps, escrow terms, and patience. Let's jump into the Midwest and small city markets like Bozeman, Boise, and Cleveland. Shift next to the Great America heartland. Rent growth here is explosive. Bozeman, Montana is projected at a staggering 35% plus rent increase in 2025. Boise, Idaho is not far at coming in at 32%, and Helena, Montana is expected to rise 30%, according to construction coverage. Rapid outbound moves, remote work, and tourism demand have flooded supply. Despite growth, these remain cheaper than coastal cities. Renters may still get more space for less money, but the markets are beating fast. Investors are swooping in, buying single-family homes sight unseen to rent, often before locals can even bid. Cost burden remains real. Many of these are small markets with fewer policy protections. Tenant rights groups are scrambling to catch up. Without aggressive development, these will remain red hot for renters and buyers. Renters can capitalize on early affordability, but expect spiraling costs. Buyers might find early opportunity, but competition in these areas from investors and financing premiums could squeeze margins. If you're investing, run long-term cap rate analysis. If we look at the national rent trends and affordability snapshot, good news, or at least mixed. For renters nationwide as of June 2025, median asking rent across the 50 largest metros was near $1,700, down 2% year over year, and marking the 23rd straight month of rent decline, according to Realtor.com. Renting continues to offer an average of $900 a month savings over buying a starter home across these metros. Pittsburgh even bucks the trend. Buying is now cheaper than renting for entry-level homes, while Memphis flipped to favor renting. Yet cost burdens persist. 46 million households are renting, the highest number ever recorded. With vacancy rates plunging and a lack of affordable development, cost-burden renters make up half of all households. So here's the takeaway. The rent declines may offer breathing room, but still don't offset long-term cost burdens. Renters should monitor metros with year-over-year drops. Buyers should conform whether reduced rent means true affordability or just volatile shifts. So why does this matter? The housing crisis isn't just personal, it's shaping our economy and society. Homeownership is dropping. 2024 saw the lowest first-time buyer share in decades. That bricks and mortgages left pool of middle classes wealth building. Millions are trapped renters, redeeming flexibility but cursed by rising costs, limited wealth gain, and no retirement equity. Aging homeowners aren't immune. Baby boomers, especially those over 65, are increasingly cost-burdened with rising property taxes, insurance, and maintenance. Over 12.5 million older households are now cost-strained. Let's look at some smart moves and tactics for renters and buyers as we move forward into the year of 2025. Be sure to track local rent trends monthly. Share data about local declines, your tenancy record, and even prepay silently like many investors advise. Move where the market's softening. Metros with recent rent dips or stabilization ordinances can lower bills, and prioritize flexibility. Reinvesting, renting in place while investing elsewhere may build equity elsewhere. Here's the bottom line in 2025. Whether renting or buying, every dollar counts more than ever. Building a housing strategy based on real data, your goals, your timeline, your city. If you found this breakdown useful, like, hit, share, and subscribe with someone house hunting. And subscribe because your housing future deserves clarity and confidence. Thanks for watching and see you next time. Saved, informed, and home wise.